Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 15th of May and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 27, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
So, yeah, I mean, lots going on at the minute. I mean, what a great interview there this week with John and Peter Smythe on the from Swansway there. From a fantastic catch up with those two guys, weren't it?
That was a really entertaining interview, and we've had some great feedback on social media for that one, and which is really good to hear. And they were on top form, and we were also recording in 4 separate places, weren't we? And it all seemed to work.
I don't know how. I was expecting a little bit more crossover between Peter and John, but I think they're just probably so used to, Peter doing his bit and John doing his bit, and sort of contrasting against each other a little bit. And it worked extremely well, and you can tell. I mean, the references to the father all the way through. From there.
That was brilliant. Yes, the dad putting on his collar and tie for the Zoom meetings
every day. And he's still very much in control and active within the business with his 3 sons. As the Swansway group there. So I mean, it was great listening to him, and I mean, what is interesting, I don't know what you thought on this one, Curtis, but actually, the differences of way these businesses operate. When they're saying about we're controlling the strategic position of this business, what we're doing. General managers are there to run the day-to-day business. We expect them to be able to order a car online with their franchise they operate within. And it's actually quite an interesting interview, that.
It is, yeah. And some of the background I found particularly interesting, because 2019 pre-COVID, they had a bit of a revamp, restructure. And when COVID hit in March 2020 and we went into lockdown, Michael, the chairman, made this sort of strategic move to just go back to basics, and it paid off.
Yeah, fantastic result. I mean, It's, I don't think the father's moving to electric vehicles quite yet from the tone of that interview, but you have to tune in to listen to that one.
Yeah, and if you'd like to come on the show or have any news or press releases to share, then you know where to message Phil and myself on LinkedIn or Twitter, or you can email us on motortraderadio@yahoo.com.
So we've got a great lineup of headlines again, haven't we? From sort of few financials there, and a little bit of warnings around what's happening in the new market. We've got used car results coming in, and the agency model or distribution model is firmly back on the agenda.
It is, yeah. So headlines this week from Motor Trader, Car Dealer, AM and Auto Retail Agenda, starting with Virtue trebles profits to 22.4 million. Strong start to 2021 as boss Robert Forrester hits out at disruptors. Also with financials, we've got Johnson Cars reports 4-fold profit growth in 2020. Cox warns car dealers not to be blindsided by headwinds after April optimism. UK used car market drops 9% in Q1. And you mentioned the agency model. We've got to look at Polestar, who are targeting 30,000 test drives after opening a Milton Keynes hub. And Cupra is reportedly considering an agency model for the UK.
Yeah, so again, we'll get onto the first story there. So heading over to AM Online, and as you say, Curtis, the Virtue Motors to grow scale and big brand marketing profile in 2021. So, there's been a lot going on with Robert this week. He's been on a few different platforms in terms of interviews and talking about their financial results, but definitely clear objectives and strategies there from Robert after a significant performance, that he's had.
Yeah, I mean, the financials looking very good. So pre-tax profits, this is the year to the end of February. So pre-tax profits grew to 22.4 million compared to 7.3 million year on year. And that's despite like-for-like group revenues declining by 21.6% to 2.5 billion from 3.1 billion in the previous year. So, a remarkable turnaround there.
Yeah, no, and on the back of that, they have adjusted their forecast, haven't they? So they've sort of upped that by 7% to 24.6 million, come up from 23 million forecast in 2020. So again, very, very positive results there for Robert, and very clear performance throughout the different lockdowns up until the end of February there. So very focused on what they're up to in 2021.
Yeah, and the AM piece actually digs a little deeper into vehicle sales. So it goes on to say that during 2020, Virtue pivoted successfully towards online car retailing with the launch of its Click to Drive platform, and that helped it achieve 121,500 vehicle sales in 2020, which is down 27% on the previous year's 166,500. But bearing in mind, this is during lockdown, so a good result there. And you've got some comments, haven't you, on that Robert made on Twitter?
To quote Tristan, love a good comparison. Yesterday, Kazoo says we sold 25,000 cars online in 18 months. And then today, which is on the back of the Robert Forrester Virtue story, says, hold my beer, we sold 38,446 in 3 months. So again, a little bit of a battle going on there, but that's kind of what we're talking about in the next story, isn't it, here from Motor Trader?
It is, yeah, where the headline is Virtue hits out at disruptors. So this does quote Robert at length. And what interesting point he makes here is the fact disruptors to the sector, such as Kazoo and Tesla, have been developing physical networks is illustrative of their recognition of the need to have a physical presence in addition to their purely online capabilities. So, he really is making the point that clicks and bricks is the way forward. This is how vehicles are being delivered to market and being bought.
Yeah, and I mean, we touched on that a little bit on one of the stories towards the end, because there's a bit of an element of that in the Polestar story, isn't there, around that's physical element of it. But very much, they're coming back from these AM100 businesses now saying that there is a need for the online presence, but there's also a need of a physical support infrastructure and face-to-face as well. So very much pushing back. And you can't deny that, on the back of the interview there with Swansway this week that we had, and then obviously this week with Virtue there, and the next story there from Johnson's, definitely some good performances coming out from these operators.
Yeah, can I give you my favourite quote from Robert from this story? I do like this one. It's disruptors who have recently entered the used car market have very little, if anything, to add to the sector in terms of customer proposition or experience. And they do not sell new cars or, in some cases, support customers thereafter with their servicing needs. So Robert making it very, very clear there that the franchise model as it exists with clicks and bricks is the way that customers want to transact.
Yeah, lots going on. And then the next story is, again, on the same vein of profitability and financials, is Johnson Cars have reported a fourfold profit growth in their 2020 financial results. And that's for the 12-month period ending on the 31st of December of last year. But again, a great performance from that AM100 retailer, in terms of delivering that turnover and growth.
Yeah, and this follows Virtue. It follows last week's report on Swansway. So the Johnson cars delivered a turnover of 495.6 million. So that was up on the previous year's 457 million, and a 3.2 million pre-tax profit, which was up on 632,000 the previous year. So some really impressive results here.
Yeah, I do. I mean, they're a good little business, those guys down there, and I've had some dealings with them over the years. So very much focused on what they want. The partners that they operate with in terms of franchise partners there. So, a good performance. And again, we seem to be getting a bit of a run of these, don't we? I think on the back of a challenging year. Although, with the savings, I say savings with the cost reductions with furlough and online activity, I think there's been some reasonably good performances.
Yeah, and talking of furlough, they within the story it says that Johnson's furloughed 95% of its staff for 2 months when the crisis first hit, but moved very quickly to bring staff out of furlough and back into showrooms and centres. Similar story really to Swansway.
Yeah, they moved very quickly, didn't they, in getting that physical presence back and getting people back into the business and operating and dealing with customers.
Yes, and what one final point on the story. So by July last year, the group found itself delivering 120% of its usual sales volumes, as it benefited from that market rebound that we saw.
Yeah, great stuff. So the next story, going back over to AM again, and it's a story for myself actually, isn't it, I suppose, in terms of Cox Automotive. But I think that the essence of this is around the performance in terms of the April result, with 141,000 new car registrations in April on the back of obviously last year with only 4,300 and 161,000 the year before. And I think we covered that on last week's headline. But, there are a lot of conversations taking place in the new car market at the minute, particularly around supply. And I say car, it's cars and LCV, and in some cases LCV is worse, and it is having an impact in terms of used car supply. And I don't know what you're hearing, Curtis, but when you're looking at some of the, I've been on the Future of the Car event this week from the Financial Times, and semiconductors, rubber, aluminium is being asked to the majority of the manufacturers as to what impact it's having.
Yeah, and it does look as though we're heading towards this perfect storm where these shortages are really starting to have a major impact on supply of new cars, and obviously the knock-on effect there in the used car sector.
Yeah, and what is clearly coming out from the manufacturers is that it's a case of putting the pressure on their tier 1 suppliers, and then it goes on to the tier 2 and tier 3. But from an OEM perspective, it's basically saying, do you know what, we want this supply. It's your job to supply that product to us. But when you've got pressure in rubber because of what's happening in China and other markets of supply, same with aluminium, on top of what's happening in the semiconductor market, it's like you say, a bit of a perfect storm. But it is definitely seen within the used car market at the minute as to what is happening there, unfortunately.
You're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available on demand wherever you are on your podcast feed. Now, next up is our extract from the exclusive interview we did with Swansway Group directors John and Peter Smythe. Now, that brings us on neatly to, there's a great quote from your dad about having spent 54 years in the motor trade and encountering many obstacles over those years. So he says how he spoke to the management team right at the beginning of the pandemic and reminded everyone about the importance of the basics of retailing, especially treating all customer leads as gold dust. I'm wondering how this actually fed into the day-to-day operations on the showroom floor. You've already talked about the role of the general manager, but was this permeating through to the other members of the staff, of the sales team, following that first lockdown back in March?
Well, absolutely, Curtis. I mean, the first thing we do, and we still do it every day, we have a Zoom meeting with all our key members of staff, i.e., so the board members, including the chairman. And in fairness, during lockdown, he even put his shirt and tie on, because he's that kind of person. Yeah. And we get our key brand directors in. We discuss various different things, from inquiries to cash flow to bank balances, etc. And it's actually kind of, because we've got different brands, we've got commercials. It's kept us all together as a group. It's actually tied us together as a group, which has been quite good, and that's what we intend to carry on doing. That now, obviously, the chairman's had his 2 jabs, and he's back in work at the age of 82. But he's we still have that Zoom meeting every morning. And the other thing,
and it isn't a long meeting, John, is it? It lasts for 15 minutes.
Yeah, absolutely. But it just sets the tone for the day. When my dad actually sat us down and talked about how retailing, and he says, perhaps the way the customers connect with us is different, but actually some things don't change. And the fact is, customers want to be dealt with quickly, efficiently, in the right manner. And if a customer is ignored or a salesperson doesn't get back to a customer, whether they're digital, whether they're in their 80s or in the 20s or 30s, they're still not happy, are they? They still, we still get people ringing up saying the salesman didn't come back to us and things like that. So he did stress that absolutely, because of the pandemic, we had to deal with them like they were gold. And by the way, when he did say to us, I want you to break even this year, we all thought he was in cloud cuckoo land.
Yeah, we did. I mean, I think the reason he originally said treat them like gold dust is we thought, like most people, that nobody would want to buy cars, and therefore anybody who actually had the good grace to contact us had to be treated like gold dust. But what we did do, we knew every day how many leads were coming into the business in total, because our marketing department gave us that. And we made sure that at least, because you couldn't get everyone, but at least 80% of those people who contacted the business by either phone, email, or any other way went on our inquiry system, and we use Inquiry Max, just to make sure that they were logging them. So we had that motor trade oil, which is the data, and once we've got the data, we can do something with it.
I mean, what can we say? I mean, we kind of said it all at the start, didn't we? I mean, fascinating there. So that's just a bit of a clip from what to expect from that interview with John and Peter. So if you haven't listened to it, they say it's all over the social channels, then please do listen to that one. It's fascinating.
Most definitely. I mean, they're a fascinating group. They were founded in 2003 by Michael, and they now have 23 sites stretching from the Midlands up to Carlisle. So, a really, really good presence there in the middle of the country.
Definitely. So moving on to the next story, and it sort of adds on a little bit in terms of some of them warnings we were talking about before the break there around the supply of new cars and the challenges that some of the manufacturers in terms of that production. But actually, Q1 didn't finish off too bad in terms of that used car marketplace. I don't know what your view, but I think, great result.
Yeah, so this is the SMMT figures, and it's based on what they do is that they do a data crunch from the DVLA change of ownership documentation. So they found for Q1 that the used car market in terms of transactions was down 8.9%, with 1.68 million transactions taking place, and they do shed a little light on how the months actually broke down. So the decline was driven by large falls in January and February, but the market then grew in March, which was up 32.2%. But then you start having those year-on-year comparisons, and COVID hitting in March last year, disrupting the market then. But as you say, that's not bad, and I'm just wondering how close that was to your forecast, Phil.
I don't like to shout, but
we'll move on then.
It was pretty close. I think, in fairness to the forecast that we put in for Q1 in terms of the in the autofocus report, we were 0.9% out. So circa, I think we weren't that far wrong. I think it was 100,000 units. So quite a minor variance in all things considered. So no, we're pretty pleased with that. And if you haven't seen the autofocus quarterly report, then please do reach out. In there is our forecast for Q2 for new cars as well as used cars. So very much positive feedback on that report so far, and well worth the read. But I think in context,
and also, Phil, I'll be quizzing you in 3 months' time on your Q2s.
Thanks for that. I might be busy. I'm not sure. Depends on the result. But I think in context, just to add context to what you were saying earlier, Curtis, that the 1.687. Although it 8.9% from the 1.851 that we did in Q1 last year. We've got to understand, Q1 was hit at the back end of the quarter, and we talked about it, didn't we, at the time? I mean, it was flying in Q1 of last year. I mean, January, February was fantastic results for the sector. But actually, when you start looking back over the years, 2013, we only did 1.65. Before that, 2012, 1.74, and 2011, 1.73, and in 2010, 1.67. So we have gone through periods as low as what we've just done in the Q1 of this year. And with all things considered, we've got to remember that the market, for the majority, in fact, if not all of that first quarter, there was some kind of restriction in place with a click and collect facility only. So I think it's a testament to the market of the performance, and I think if supply had been better, we could have seen a better result.
Yeah, and you mentioned Q2, and that will be very telling in terms of how healthy the market is, because of the supply issues that we talk about on a weekly basis.
So, as we said earlier, with a lot of conversations, we were mentioned obviously about Tesla, didn't we, the other week, around their sort of growth plans for physical open points, as they describe. But actually, there's a story here in AM Online, and this is about Polestar targets 30,000 test drives after opening a site or a hub down in Milton Keynes there. But it's clear that they're talking about only opening it for 6 months, and it's an 8,000 square foot facility.
Yeah, this is an intriguing one. I don't recall anything ever happening like this before. So yes, it's a not purpose built, but it's a dedicated facility aimed at test drives, facilitating test drives. And as you say, it's going to be open for 6 months. And this will work in conjunction with the Polestar spaces and pop-ups. So, with leads being forwarded to Milton Keynes for these test drives. But it's an ambitious target, because they're talking about 30,000 test drives across the UK, with a good percentage of these, in fact 7,000 of them, coming from the Milton Keynes facility.
Yeah, and as you say, it's what is clear is you're starting to see these moves now from these pure online businesses, operators such as Polestar, Tesla, and others, and we know that Tesla has always had these pop-up locations, haven't they? Since they entered particularly the UK market. But actually, I think there's a bit now that they know that consumers want to see and touch and test drive these vehicles. And I don't know. I mean, we were talking before the show, weren't we? That I don't recollect necessarily seeing many Polestars on the road.
I haven't seen one yet.
So,
I'll put my hands up. I haven't seen one.
so your decision is purely based on what you're seeing in the online environment
Yeah.
and nothing else. So is it a case that actually, as the brands start to grow and the vehicles enter the road, there's more vehicles on the road, that actually they can slowly step away from that physical presence, because actually you and I would know what a Polestar looks like. And we may have even driven one, because there'll be some in the used market space that will help inform my decision on buying a new one online, and I won't need to test drive the vehicle necessarily. So I don't know whether there's a bit of that starting to appear. I could be totally wrong, entirely wrong. But, it does seem that there is this, back to what you were saying earlier with Robert Forrester, that this physical element is still very high on the consumer's agenda.
Yeah, and it's interesting because within the story they mentioned the Polestar spaces that are being operated in Westfield in London that's operated by Endeavour, and Lookers are running a pop-up in the Trafford Centre in Manchester, and this year they'll be joined by locations in Birmingham and Glasgow. So it's going back to the clicks and bricks. Buyers do actually want to look, touch, feel sitting in cars.
Yeah, and it's interesting there because you mentioned Lookers, and there's a bit in the story there that's saying that the brand is actually hosting test drives from the Lookers location, which is their leasing site over in Harrogate there, the Lookers leasing headquarters over in Harrogate there. So again, it's getting these vehicles in front of the consumer, which seems to be happening a lot more now from these online operators.
Yeah, and finally this week, and there is a clear link between the last story and this one. So heading over to Auto Retail Agenda, and the headline there is Cupra in agency model move. So Cupra, which is SEAT's premium performance brand, is understood to be planning to shift from a franchise model for its UK network to an agency agreement, and that could be as soon as this summer, according to the report in Auto Retail Agenda. So this is particularly interesting because Cupra is in the UK, it is on sale, it's on sale at SEAT dealerships, but this looks as though the model could shift from what it is at the moment, pure franchise, to this agency model within the dealerships. And the story does actually quiz Cupra on its intentions. They speak to a spokesperson there who says, we are constantly exploring new opportunities to retail our vehicles. So fairly non-committal there, but they've also spoken to one retailer who's voiced concern that Cupra's move to an agency model agreement would not properly address the fair distribution of investment costs because it was relying on SEAT showrooms, facilities and staff. So interesting potential disconnect there, I think.
Yeah, there's there is a lot going on the space of agency sales model or distribution model, as some people refer to it as, but and it's kind of again being part of the FT Future of the Car event this week, popping into the same conversations, Peter Campbell and the other guys there, raising it as what are the OEM strategies around this direct to consumer, obviously referring to saying that where does the dealer sit within your future strategies and your go-to-market strategies. And fascinating, because I think we should call out the interview that we did a few weeks back and with Steve Young from ICDP,
definitely.
And he touches on the subject of agency sales models, and I think BDO talked about it as well a little bit in their motor report around
they
this.
did, and indeed last time we had Dash on, he spoke about the agency model as well, because he's a bit of a fan.
Yeah, well, there is talks where VAG, as a they do operate some agency models in some of their countries, or they're trialing it in some of their open points across the UK, Europe, and some of their international markets. So again, it's high on the agenda, and I think there's even talks more recently around the US, because it's actually, I believe, it's illegal for a OEM to sell a car directly to a consumer in the US currently. And some operators in the US are trying to find ways around it, of being able to have more control over that supply of a new car to a consumer. But I believe it isn't legal. You can't do that in the US. So there's lots of conversations going on now, and it doesn't help in terms of the EU exit, because the UK sits outside now the EU regulations in terms of deal agreements and things like that. So I know NFDA have done a lot of work on it over the years, and I'm sure there'll be a lot more coming on that. So it's definitely a hot topic, and this topic is only going to increase more, I think, as we sort of go through this year and into next year.
Yeah, I can feel an update on the block exemption coming on, but maybe another day.
I think we do need to. I think it is, like I say, it's certainly a subject, and I know Steve Young, and we didn't sort of go into it in huge detail on that interview with Steve, but he's got a lot of information on it. So maybe there is we'll do a special podcast on it at some point, purely on agency distribution models, and sort of share some insight and some thoughts around that.
Yeah, definitely.
So again, fantastic week of headlines, and plenty to look at. Lots going on in the new car market, a lot of challenges and opportunities to a certain extent in the used car market. I think the voice of reason is coming out to say that retailers should hold out for margin. It is about profitability. Stock isn't coming through at any speed anytime soon, and there is a shortage of certain products in the market. So again, it's all about profitability at the minute within the deal sector. But to counter that, lots going on in the financials. Fantastic results there. I don't know what your thoughts are, Curtis.
Yeah, I mean, the financials are really encouraging. So, what we've reported this week, and indeed in recent weeks. So, despite all the headwinds from last year, the financials are looking more positive than we could have hoped for.
Definitely. So that's it. That's for this week, and lots to go at.
Yeah, that's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chat that matters. As we said, do check out our special Swansway Group interview, which is available now on your podcast feed. Philip and I are back again next weekend with the week's headlines. Until then, it's goodbye from me.
And it's goodbye from him.